Hi. Yes, guys. So, um, I had a failed signal, and I wanted to share with you the details of that failed signal. It was on volatility 100, and I wanted to show you why the signal failed and the next possible entry that was available. You know, um, so you could clearly tell that we were in a bullish market stemming from maybe this point. Let me put my line here. Stemming from this particular point, you notice that we're in a very bullish market, you know, um, and something happened, when the market swung from here. Let me just quickly use this arrow from here to the side, and then the market moved, and then came back up somewhere here, and then swung up, and then came down to this side, and then it continued pushing up here, you know, it continued pushing up here, and then retraced, and then boom, into the skies. I saw this trade, and then I placed a buy limit, but unfortunately, it missed it by some pips. It's not some pips because this is a weekly chart. It missed it by a lot number of pips. So let me explain the premise for this trade. When the market was swinging up, down, what I noticed was that when the market actually swung and came back down here, okay, when the market came back down here, I wanted to show you exactly where the market, the buyers actually came into the market to buy. All right, let me show you where exactly. Okay, so the market, when it swung down here, there was this bullish candle here. Okay, there's this bullish candle here. This is the top of that bullish candle, this particular candle. Here, this particular candle. I'm trying to get something to indicate it for you to see. This bullish candle here, this particular candle. Yes, this particular candle was the candle that the buyers actually began to place their trades. We are looking at institutional orders. This is where the institutional orders actually took place. Okay, this is where the institutions began to buy. And naturally, what happens is that any point where institutional orders takes place, don't worry, you would have a gist of it, and you can wait and come back to it, and then catch up some very nice trades. Especially when you have seen the buyers of the market. So the buyers of this market at that point was a bullish market. When the market, from where I indicated this vertical line, you could see that the market came down and strong up sharply. So you could see that we're in a bullish market. So when the market dropped down and came to this point, now assuming you don't even have a trade till you saw that the market has come to this point, okay, where I have my candle, you will notice that price wanted to dip deep into the pocket of the place where the buyers institutional orders took place, which is this bullish candle that I indicated here from the top to the bottom. Usually what happens is that after the institutional orders place their either their buy, what happens is that after they place their buy, look at this bold red line, bold horizontal red line. After they place their buys inside this bullish candle, after they place their buy, the market it traded down 3 bullish candles before the market began to rally above and rally up. When it goes up, normally what we should expect is that after the institution place their buy orders inside this candle, inside this bullish candle, price would automatically trade up. When it trades up, the next thing you should expect is that, let's even stick here, the next thing we should expect is that price would come back into that area or into that candle, okay, Usually it comes sometimes to the tip of, that is how come I place my buy limit at the very last price point of that bullish candle. It usually comes down to the tip of it, dives deeper into the pocket and takes more orders because they were already original orders which were there, which were buy orders. So the market now comes back into that, buys more, and then it rallies faster up. So here you could see that the market came down into the pocket just slightly, and then it went back up. It went back up. It dipped down a little slightly, then it couldn't stay, then it just traded back up. And notice from here, it came back and dived deeper, and this is where I'll be framing my trade. I'll be framing my trades here. And when it dived deeper into this pocket, it didn't even stay. And this was a clear sign of the next week candle showing us that this is a clear sign that they have dived deeper into the market and they are going to buy. So you notice this. Notice where I'm placing the bold line. On the top of that bullish institutional orders, you notice that on that week, immediately price touched the tip of that price, which was from the old institutional orders they had placed. It rallied up. Price never came back down to that point again. It rallied up so high and took down all the highs that it had formed previously. I mean, this would have been a very good point to have exited your trade, taking down these highs. So this is where you find the institutional orders, and join the market, and just rally up and then enjoy the profit. That's institutional orders, knowing where the institutions are playing their games. Yeah. All right, guys. So if you like my videos, subscribe to my channel. I'll be posting more videos, and gradually I'm hoping that you'd have deeper understanding of the things that I'm trying to explain here. All right. Okay. So I'll be posting more videos. So this is Volatility 100 index. I'm going to break it down. If you watch this video, the next one will be more easier for you. I'm going to break it down for you to understand what is really happening now and what you should expect next. Okay. All right. So we'll leave you and say have a nice evening.